Hi, and welcome to the Day Trading for Beginners podcast. This is episode 31. And in this episode, we're going to do a quick recap of all the topics that we covered in terms of technical analysis. Now, next week is going to be the finale of season 1. We are already at the end of June here, so we are 6 months in. We started this journey in January 2024. Time flies. 6 months is already over. So in that episode, we're going to do a recap of everything that we've covered in the first 6 months. And I'm going to share what I plan to do for the rest of the year. So in this episode, I thought we would do a quick recap of all the concepts and topics that we covered for technical analysis. We pretty much covered, a lot of the introduction concepts that you will need to study for technical analysis. So what I want to do before we get into that is just share where you can find all the resources to help you learn. So the first thing that you can do, if you haven't already, you can download my 6-month blueprint, and that outlines everything that we've done in the first 6 months. And I am going to update that blueprint with an updated version that has all the links to all the resources that I personally used to study and learn over the first 6 months. So you can find a link to that in the show notes. You can go to stokestrades.com/blueprint. Now, what I have for this episode as well, and I'll have a link below in the show notes, is a link to a Content Hub page that has all the articles, videos, and podcasts that have to do with technical analysis. So you can access that page and you can sort of run through it and kind of use it as a table of contents for your own personal studying of technical analysis. And again, we do have a free community on School where all the resources that I personally use to study technical analysis will be listed in the first module under the technical analysis course. Everything is 100% free. But if you come to our community on School, you can join if you wish, and then you can access everything that I found useful when I was studying technical analysis. So I just wanted to share that. You can find all the links below. And again, if you download the 6-month blueprint, then from time to time, I will email you anytime I do an update. So I'm going to update the 6-month blueprint with all, updated links and resources. And then anything that I find useful, I will email you. So that resource is really the best thing for you to access. And it's 100% free. So let's jump into it. Technical analysis for beginners. Basically, I have a list here of all the things that we've covered. And for my personal sort of journey here, I covered technical analysis, studying it over the past 2 months. So I mainly studied, on the weekends, and, I had some evenings that were free, but, my time was limited, and the amount of time that I was able to use to study in 2 months really allowed me to achieve basically just an introductory level of understanding. So mastering technical analysis, it's going to take much more time. I'm actually planning over the next few months, the summer of 2024, to sort of revisit all these concepts and sort of learn them in more detail. I'm going to share more about that in the next episode. But basically, the bottom line here is that there is a lot to study and a lot to learn when it comes to technical analysis. So you need to consider your personal schedule, what your commitment level is, and just have some realistic expectations. A lot of people that are successful at trading, they always say that they're constantly learning technical analysis. So I think there'll come a time where you can study enough to get a good foundation and then look into a strategy. That's sort of the game plan here. But for me personally, I feel like I need to review all of this stuff and go into it in more greater detail to really have a really good foundational base. So again, this summer, I plan to study this more. I'll have a better schedule. But if you are like me and you kind of have free time on the evening sometimes, or just the weekend, you're just not going to master technical analysis in a few months. It's just going to take you a lot longer. So right below this video, I'll have a link to this resource page. And I want to just talk about quickly, before we get into the topics that we covered, just sharing the resources that I used. So the only resource that I bought over this first 6 months was a few textbooks. So I did buy a options textbook and a few audiobooks. But the main one for technical analysis was the textbook, Technical Analysis of the Financial Markets. And I'll have a link to that below. And you can buy that on Amazon. I highly recommend it. I also signed up for a free account with TradingView. So TradingView is a charting software that allows you to kind of look at these charts. So if you're studying technical analysis, you probably want to look at some charts, use some technical indicators and so on. So TradingView is free. It has a free option that allows you to do use the charting software with some limitations. In the future, I'm going to buy a paid service, but I certainly don't need that when I'm just starting out. So TradingView, you can find a link for that below as well. You can get access to a free account. You just need to sign up or else you're going to get this annoying pop-up all the time. But those are the only two resources I've really used to study technical analysis, along with all free articles online or other YouTube videos. So if you're a beginner, you're trying to learn this stuff, you probably don't need to buy someone's course on technical analysis. This textbook, I think a lot of people create content from this textbook, Technical Analysis of the Financial Markets. So that's a really good base. I purchased the study guide and the audio version of that book, and that's something I plan to dive deeper into in the next few months. So that's the resource I used. And I also do use ChatGPT while I'm studying. I find it really easy to just ask ChatGPT, some quick questions just for definitions or to clarify a concept. Obviously, that's a paid subscription, but I have found that ChatGPT has helped a lot with answering some quick questions for me. So those are the resources that I used, and I would sort of recommend that textbook. Some people in our community on school have also purchased it, and they also have written, sort of small reviews saying that they are finding it useful. It seems to be recommended all over the place in terms of a good, first textbook for beginners who are studying technical analysis. Okay, so let's jump into it. Let's talk about the concepts that we spoke about. So the first podcast that we did about technical analysis was sort of titled, "What is Technical Analysis?" And sort of we compare technical analysis to fundamental analysis. So if you can remember, technical analysis involves examining price movements and patterns on charts and then sort of making your trading decisions, while fundamental analysis focuses on, assessing a company's financial health and the broader economic factors, and, forecasting what it plans to do in the next few years. So one thing that jumps to my mind as soon as I sort of talk about those two things is Tesla stock. So for me, I am a Tesla shareholder. I have a pretty good size position, and I believe in the future of this company. I think in the next few years, 5 years, 10 years, it's going to be an excellent company to own. However, if you look at the past 3 years or so, the stock hasn't really it's just been trading sideways or it's down. But if you were a technical analyst, studying Tesla, you could have made money trading it this whole time over the last few years. And I've actually personally done a little bit of trading, a small portion of my Tesla stock, based on some people that I were following that were doing day trading and Elliott wave theory for trading Tesla stock. So a lot of technical analysis were calling Tesla stock at the beginning of the year, where it was around maybe in the high 200s or mid 200s, to fall down to, a low area of 140 in the spring. And that's exactly what it did. If you kind of look at what Tesla's done and you look at some of these people that do technical analysis, everyone, some of the people have called the stock to fall down to the 140s in the spring and now bounce back. And, once you study and you kind of look at what they've been saying and you have a little bit of a base of technical analysis, you can understand that, Tesla is trading, consolidating right now. It's moving sideways, but, there are some patterns that are forming, and, a breakout is imminent, and it should happen soon based on, these analysis reports. So basically what I'm trying to say is that I have invested in Tesla based on its fundamentals, but I'm also trading a little bit of it based on technical analysis. And that allows me to potentially make money on the stock while it is, not growing based on its fundamentals. And that's sort of where Tesla is right now. And you can do this with other stocks as well. So the philosophy of technical analysis basically comes down to these three things. That is that price action discounts everything. So all known information is thought to be reflected in stock prices. That's what it means by price action discounts everything. Prices move in trends. So price movements follow trends that can be identified and predicted. And then history repeats itself. So patterns in price movements tend to repeat over time. And if you sort of eventually watch anyone that does some videos about technical analysis, they do some forecasting, you can kind of see how these 3 points are certainly valid for the majority of the time. Obviously, it's not foolproof. It doesn't work for every single analysis and forecast, but it certainly does work. So price action, again, that refers to the movement of a stock's price over time, showing how it changes and fluctuates. And then as a day trader, you analyze these movements on charts to understand market trends and then predict price changes based on sort of past behavior. So that's what, price action is, understanding that. And then we talked a little bit about the news and price action. So I think for me personally and other beginners that start learning and learning more about technical analysis, the idea is that I think we all kind of gravitate to this idea that, you want to trade the news, or when something happens in the news, then the price is going to change. But some successful people, basically what I found that they recommend is that beginners, you don't want to trade the news. You sort of want to just ignore the news and just study price action, because technical analysis assumes that the news is already reflected in the price movement. So the market reacts to news almost instantly. And by the time, traders act on it, the price is already adjusted. So technical analysts focus on price action rather than the news itself to understand, market sentiment and predict, even future price movements and trade on that. So by focusing on charts, candlestick patterns, volume, and the other indicators that we've been speaking about, you can make informed trading decisions without sort of needing to constantly monitor external news events or, any of the company's fundamentals. Now, obviously, if some major news comes out, it does affect the stock price. But I think for the most part, beginners can just focus on price action and not worry about trading every piece of news event that comes out. Many of them are going to be already priced in, again, unless it's like a really shocking news event where, a product might be harming people and all that kind of sort of stuff. So I think that was important to kind of understand. It's something you might want to look into a little bit more yourself. So that was the first episode. We talked about, what technical analysis is, the difference between that and fundamental analysis. And then we moved on to talking about reading candlesticks. Now, one topic that we haven't spoken about yet in a podcast form is candlestick patterns. And I plan to research those more in the coming months and probably make a YouTube video rather than a podcast discussion. But candlestick patterns are, something that you will want to study and memorize and learn various patterns. But what we did talk about was just the candlestick itself. So learning how to read candlestick charts, it's going to be crucial for any day trader. The candlestick chart provides a detailed visual representation of price movements over various time frames. And these can range from, minutes to weeks. So you can look at these charts and you can see each candlestick represents 1 minute, each candlestick represents 4 hours, each one represents a week or a full day, and so on. So basically the candlestick chart, the candlestick itself, it represents the stocks, or it illustrates the stock's opening and closing prices, as well as the high price and the low price. So it's very important for you to understand sort of the anatomy of a candlestick and understand how to read them. And we created a video on that, and we have a guide with some images as well. So it's really important to do that. And this is where sort of TradingView comes in, the software. Again, as you progress and you become a full-time day trader, you might use TradingView or you might use some other softwares out there, but you can get a free version and you can actually look at these charts and then you can sort of understand it a bit better when you're actually using a software that has candlestick charts that are kind of operating in real time as well. So that's why TradingView I certainly recommend it, just to get a free account and sign up for that. Okay, so after we spoke about candlesticks, then we kind of talked about, trends and trend lines. So certainly an important topic in technical analysis. Understanding and identifying the trend is going to be super important, something I think as you progress, you're going to just be able to do very easily. But in the beginning, you do need to understand the important aspects of drawing trend lines and how to draw them properly. Because if you're trading based on trend lines that are wrong or don't make any sense or are drawn wrong incorrectly, then your trading isn't going to basically line up with what the majority of other traders are doing. And therefore, you're going to make trading decisions that aren't going to work out. So everyone sort of needs to be looking at the same sort of lines and trend lines. And that's going to help you make the proper trades that are going to, do the future price movements with what you're thinking. So basically, if you're trading based on trend lines that no one else sees, then you're not going to be a successful trader. So trends, you've got the uptrend, downtrends, and sideways trends. And we spoke about how uptrends are sort of marked by, rising peaks and troughs. So, the stock moves in zigzags going up and down. Downtrends are the opposite. And then, eventually you'll be able to have you'll understand trends and be able to notice when, a trend reversal might be happening. So there's certain rules about, whether the highs and the lows have to be higher than the previous highs and lows, and then you have an uptrend, and so on. So trends, drawing trend lines is super important. And then we also spoke about these horizontal lines that are important to draw on charts as well. And those are going to help you identify some important support and resistance levels. And then we also spoke about trends are generally classified with their duration. So you've got major trends that happen, over the course of maybe 6 months, and you've got intermediate trends that are happening sort of weeks to months, and then you've got these minor trends that are happening, days or weeks. So sort of understanding these classifications is going to help you align whatever strategy you are working with. And again, market first is always a term that comes up a lot with trading. So understanding where the market is at, understanding what type of trend you are in is going to be very important for you to make your various day trades or swing trading and so on. So trend lines are very important. Next, we spoke about, moving on from trends and trend lines, we spoke about this support and resistance, this idea that, there is a support level where a falling market finds buyers and then it begins to rise, acting like a safety net. So that's support. And then there's resistance on the other hand, where a rising market encounters sellers and starts to fall, functioning like a ceiling. And there's these support and resistance lines, levels with all sorts of stocks and all different time frames as well. So these levels are really, really important for you to identify. It's going to help you with buying and selling points. Basically, also these support and resistance lines could switch over time, where support becomes resistance and resistance later becomes support. So in our podcast and the video, we talked about some of the psychological reasons why support is support and resistance. And then, when it's breached, resistance becomes the new support level and vice versa. So this role reversal happens due to the changes in the trading behavior, and understanding these support and resistance levels. Again, it's going to be important for making and spotting opportunities. And we talked about how, if the price is rising up into a resistance level and price begins to potentially break through, there's more volume, there's more buyers that come in. Well, there's a whole thing that sort of happens where that could potentially, drive the prices up, where you have people who were potentially shorting the stock when it came up to a resistance level, thinking it was going to come down. They need to now cover their short positions. People that sold now rebuy back in. So there's a whole, supply and demand and psychological aspect that is going on around the support and resistance level. And it's really interesting to hear some more successful people explain that. And, in the article that we have up, I have a link to a video where some people talk about, understanding what is going on with the support and resistance levels for beginners. And I found that very useful, and that's linked in one of the articles that we have up about support and resistance. So again, that's a key thing to understand. Again, this is just sort of an introduction to all these topics. Certainly you will want to go out and just get a full understanding of this information. Again, my content that I'm creating should be used to help you get an introduction to this stuff and sort of be used as a table of contents, but by no means is my article or video about support and resistance sort of a full encompassing piece of content about it. You'll certainly want to go out and study all of this stuff in greater detail. Moving on. Okay. So we talked about support and resistance. Then we talked about, technical indicators and oscillators. So, technical indicators really help you analyze the past and present price information and predict future market movement. So that's what technical analysis is. And then these tools, the indicators, basically they help transform raw market data into more digestible information. So, there's all stuff going on the chart. You can't physically and mentally do all these calculations, but you can use these tools that, average things down, create sort of an index to compare things to. And basically they take the raw data and help you create something that's usable that you can visually see on a chart and you can make trading decisions from. So that's what these indicators are. And they range from, simple lines on a chart to complex calculations based on, price and volume history. So there's a whole bunch of indicators. We did not cover all of them. We did cover moving averages. So that's an important one. Basically, it just shows that the average price, what the average price has been over, a specific period. So the 20-day moving average will show you the average of the last 20 days. There's the 50-day moving average, the 200-day moving average. So there's many of those that are many traders use. We talked about the RSI, the relative strength index. So that shows when a stock or a security might be overbought or oversold. So that's an oscillator. It uses a calculation based on, it creates an index for you to kind of see. And we talked about when this indicator shows a value of 70 or above, that might be a sign that the stock is overbought, and something below 30 indicates that it could potentially be oversold. So that's an example of an oscillator. And then we spoke about the MACD as well, but we certainly didn't cover all of the technical indicators. That's something that I'm personally going to do again moving forward. There are Bollinger Bands that we didn't talk about, the Ichimoku clouds. We did talk about the VWAP in the volume section, but there are other technical indicators. Certainly we didn't cover them all, but you will want to sort of go out and understand most of them. Again, when you start trading and you have your own strategy, you might use some of them. You certainly won't use all of them. Every trader and strategy sort of, leans and uses a few of them. But you'll certainly probably want to just understand the basics of all of them. And then again, once you get into your strategy and you find one that works well for you, you'll probably want to use a few more often than, using every single one of them. So that's also something to keep in mind. Okay, the next thing we spoke about was volume. Now, volume, there are textbooks written on volume. In our community on school, under the resource section, I've got links to other textbooks that people have read and recommended. So volume, it's really important. Understanding price movements obviously is going to be crucial, but incorporating volume into your analysis, it's going to significantly enhance your trading decisions. And again, there are textbooks about volume. So our discussion was very much just an introduction to it, kind of just talking about how important volume is. And again, volume measures the number of shares traded in a market during a given period, and it indicates the activity level of a stock. So high volume suggests strong interests and can lead to more stable price movements. And then low volume can, often leads to maybe volatility or price slippage again. So, if you wanted to buy a stock at a certain price and it, gets executed at a different price, that's price slippage. And sometimes that can happen when there's low volume on that particular stock. And volume is really closely linked to price movements. High trading volume, again, generates stronger interests and can drive significant price changes. So if you're looking at patterns, or if you're looking at various things on a chart, you incorporate volume, and that can help you solidify that what you're looking at is actually happening. So I'm not really explaining myself well there, but basically volume can help justify or confirm that, a price pattern is potentially happening. So we talked about price patterns or chart patterns, and we talked about the head and shoulders pattern. Well, with significant volume on that first shoulder, and then as volume, starts to die off as the head is formed, that's a strong indication that, this chart pattern is forming and there's going to be a reversal and so on. So again, volume is important, something you'll want to study more on. We talked about the volume. There's a volume indicator, the VWAP, so the volume weighted average price. So it takes the average price, and it also incorporates how much volume is used to kind of give you a strong indicator there. So that's a really popular one. So again, bottom line volume is important, something you'll want to understand and learn how to see on a chart. And again, there's all more, textbooks and books written about volume. So certainly something that we will want to learn even more about. Okay, so the next few things that we learned, two more topics here, were chart patterns and then Elliott wave theory. So chart patterns, understanding price movements, like we said, it's important. And then recognizing these patterns on a chart can significantly enhance our trading decisions. We spoke about reversal patterns and then continuation patterns. So the one that we spoke about was the head and shoulders. That's a popular reversal pattern, one that seems to offer quite a high percentage of success when it is actually formed. And then we talked about continuation patterns like a bull flag pattern. There are many other patterns, certainly, that we did not cover. The textbook that I've recommended that I'm reading has all of these and sort of gives more detail on all of these. Again, over time, you'll just want to be able to memorize and learn all of the main chart patterns, be able to recognize them on a chart and just understand, what's happening with these various patterns. So again, patterns are really valuable. They are not foolproof. So that's something to consider. So it's important to be able to also recognize when a pattern is potentially wrong. So again, they aren't foolproof. And when you recognize a pattern, if it breaks down, you also need to recognize that what you thought was a pattern is wrong. And that's going to help you sort of limit your losses as well. So patterns are important, something that you will want to learn more about and start recognizing some of the major ones. And then the last topic that we covered was Elliott wave theory. So understanding market movements can seem chaotic, especially when you're a beginner. But this Elliott wave theory, what it does is it offers a structured approach to predicting trends based on these wave patterns. So it was developed by Ralph Nelson Elliott. And basically his theory suggests that the market moves in predictable wave patterns due to investor psychology. So these are divided into what are called 5 impulse waves up, or 5 impulse waves, and then followed by 3 corrective waves. So in our article and video, I have some great resources for this. There's someone on X who I've mentioned quite a few times who day trades every day, live streams on X, and he uses Elliott wave theory to day trade Tesla and other stocks. And he basically has charts that outline all of these waves. So if you come and study Elliott wave theory, you can use my content as an introduction, and then you can watch him actually day trading with this theory, Elliott wave theory. Personally, I'm leaning towards potentially studying this in more detail in the future. I can see myself using this theory in my strategy moving forward. I've sort of there's something about it that I like. I can understand it, and I've actually seen it in action working. So just an anecdotal story. At the time of recording this, Nvidia reached a high of 140 and reversed a little bit. This Tesla tracker predicted exactly that, it's either going to hit 140 and continue on, or it could potentially pull back into wave 2 at a price of around $124. It reversed down to 124 and 33 cents, exactly as his wave 2 predicted. And now he's predicting that it's going to move up into the 160. So obviously that's not financial advice, but these waves that are included in this theory, wave 1 starts the trend, wave 2 is a pullback, and then wave 3 is a stronger wave. He's really been quite accurate with studying a lot of stocks using this theory. And that NVIDIA call that he made was just on point, almost perfectly predicting the pullback. And he's doing this with Elliott wave theory and then with these Fibonacci ratios. So that's another technical indicator that you'll want to be familiar with in the future. Fibonacci retracements and extensions. You can use them in TradingView. And basically, Elliott wave theory combines these ratios and these Fibonacci numbers we spoke about. It's a series of numbers, and there are some important ratios when you take this series of numbers and you make some divisions, and basically you'll get these popular retracement percentages. So the 61.8 percentage is often a percentage that a stock might fall after it's made an uptrend. It's very common in the trading world. The 50% retracements, that's like a psychological percentage as well. And then there's other ones like the 38.2. So as you plot these on, you can make predictions on where the price is going to move up in these waves and move back into these corrective waves based on these Fibonacci ratios. And it seems to be quite accurate. Again, it's not foolproof, but from what I've seen, I'm quite interested in learning more about Elliott wave theory and potentially using that in my strategy. So those are the topics that we covered. I hope this was useful. Again, in the show notes, I'm going to have a resource that lists all of these where you can kind of click and you can watch listen to the podcast, watch a YouTube video, and access an article. And then you can find all the resources that I personally use to study this stuff as well below in that resource and on our community on School. Now, what I did not cover yet, again, is going to be important is the candlestick patterns. So that was a section that we just didn't get around to doing. Certainly, it's better to create content about that on a video. So that's something I'm going to do in the next few months. But that's basically a good introduction to technical analysis. So if you're a beginner, these are the topics that you will want to study and eventually master. And then moving forward, whatever strategy you get into, you'll probably want to sort of master those technical indicators that you might be using. You certainly probably won't want to use all of them, but just understanding them is really important. So in terms of what's next for this, the resources, again, that I'm listing, I'm going to update them in the future with more content about technical analysis. I plan to study this in more detail, maybe create even some more in-depth guides about these topics. So again, this is sort of an introductory level, but I want to master this stuff, and I plan to create more content related to me learning this stuff in greater detail. So again, I think we'll wrap up there. Thanks so much for listening. In the next episode, it's going to be the end of June, the end of our 6-month journey here. I'm going to do a sort of season 1 finale where we kind of talk about everything that we've covered. And I'm going to share what I plan to do in the next few months over the summer and for the rest of the year. So that episode's going to be out next week. I hope that you tune in to listen to it. And again, if you've not downloaded my 6-month blueprint, that's probably the best thing to do to stay updated with everything. Any major news, I can email you. And again, we have a free community on School that is growing quite nicely now. I think we've got 250 members. More people are sharing their journey with us. And if you need an accountability partner, or if you want to just become a full-time day trader and you need some accountability, you can join our community and just post what you're doing every week like I am. And, I think it's going to be quite valuable for you. If we look back, 6 months flew by, but I was able to contribute something to my learning every week. And I'm in a much better position now after 6 months of doing that. And I think that community on School certainly helped me. So, if you're getting started or you haven't really been committed yet, if you join that group and just say, hey, this is what I'm studying this week, this is what I studied this week, by Christmas, if you stay committed, you will have, 6 months of learning under your belt. And I think you're going to be on a much better path towards becoming a full-time day trader. There's a lot to learn. It's hard work. And, you just got to stay consistent. So hopefully that community can help you with that. So thanks so much for listening, and I will talk to you in the next episode.